So if someone is actually having their family alive, they would lose money by paying taxes. And then if, let's say, mom and dad both passed away, and then only then they sell the property, then they are totally exempt from paying taxes.
That's all the stepped up tax basis. So let's say mom and dad give you a house. They gift it to you. But you sell it during their lifetime. When you sell the house, your initial starting tax basis is how much your mom and dad paid for the house when they bought it. But if this is done as part of a life estate deed, when they pass away, you get the stepped up basis. So let's say mom and dad bought a house in 1972 for $44,000 and they gifted it to you. That's your starting tax basis. You sell it now for $1 million. It's a lot of gain. But if it's a life estate deed or it's an inheritance, and then when they pass away now and it's worth $1 million now, that's your starting basis. So you don't have to pay capital gains taxes if you sell the house a short time after their passing.
What is the cap? $5 million?
So that's the estate. Okay, so there's estate tax rules, and it changes every year. New York State is close to $6 million now. Federal government's over 10. But since I've been practicing, I've seen no cap, where there was no estate taxes, and I've seen it start at $1 million. For a long time, it was like that. So it changes all the time. It depends on who the politicians are, what the rules are. You can't really plan for that because you don't know what the cap or the estate tax amount is going to be 5, 10 years from now.
I have seen a lot of people wait off until parents pass and only then sell the property because that's, unfortunately, it benefits financially.
It does. It does. I had a client earlier this year who really needed to sell for mom and dad, and they had everything set up properly, but they didn't want to wait until mom and dad passed away. So they went back, and there was significant capital gains tax that were owed. So it does make sense financially sometimes to wait for that passing, so you get the benefit of the stepped up tax basis.
Do you know exactly what the numbers are, or do you have to refer them to an accountant?
For how much they pay in capital gains taxes?
All those details, yeah.
Well, that depends upon your capital gains. So let's say and there's all these different exemptions, but what it comes off your gain is any improvements you made to the house when you lived there, any of your acquisition fees or mom and dad's acquisition fees, and any of the costs when you sell. All right, so your acquisition fees, your sale costs, and your permanent improvements you made to the house come off your gain. Mm-hmm. Okay, and then if you're selling a primary residence and you're married, you get a $500,000 exemption on a gain, provided you haven't sold another house in the last 2 years as your primary. Okay, it's $250 per person or $500 for a married couple. If it's an investment property, you don't get that exemption. You can only, what comes off your gain are just those costs I mentioned earlier. So, but when you have a property that's being gifted to you, yes, it is. If mom and dad are still on there, if it's just a gift and they just said, here you go, here's the house, we're not a life tenant, and you go back to what they acquired the house for, unless you can establish that you are now lived there for 2 years as your primary residence before you sell. If it's an inheritance, you get the stepped up basis.
What happens if only one person passes away and the second one needs to move out because they need to have a different lifestyle? They still lose the benefits, correct? If they sell within, let's say the father passed, the mother's still alive.
They get the benefit of their spouse. If they sell within, I think, first 2 years, they get the benefit of their spouse's 250 exemption. Otherwise, if they sell, let's say 5 years later, they get the stepped up basis on that one half to what the value was when that spouse passed away. But then their starting basis is what the property was when they first bought it.
There's
a lot of complications.
There is so many complications, and this is why I turn it all back to the professionals like you, David.
Oh, thank you.
I admire for everything you guys are doing because it's a lot of work. It's a lot of knowledge. It's a lot of expertise. How do you guys keep up with all the latest news and all the updates? How do you guys deal with it?
Well, we're members of bar associations, and we get updates, and you have to stay on top of it and stay on top of the new case law, the new statutes. And, we have requirements for continuing legal education. Every 2 years, we have to take we have to take at least 24 credits of continuing education. And I often will look into this estate area and take those, even though this is what I do, because the rules are always changing and you want to make sure you don't miss anything. Yeah.
Right. Well, everyone, David is a wealth of information. I definitely am grateful for him to join me today. It was a very impactful episode where you guys could learn and hear all the little nuggets that he is willing to share with you.